Hi everyone. Earlier today I was making a video predicting that the Federal Reserve would cut interest rates, and it was based on some data, and I knew they had to do it. I said it would go down to either 0.5% or zero, and it would be sometime this week. And then just after getting the video edited, while it was uploading, they announced that they were cutting rates. So the Federal Reserve cuts rates to zero and launches massive $700 billion quantitative easing program. Now, down further in this article here, there's a paragraph that I want you to look at. The Fed also cut reserve requirements of thousands of banks to zero, so they don't need any reserves anymore. In addition, in a global coordinated move by central banks, the Fed said the Bank of Canada, the Bank of England, the Bank of Japan, the European Central Bank, and the Federal Reserve and the Swiss National Bank took action. So they're all coordinating these things together. The rate cuts, what's happening right now, we're coming to the end of a debt supercycle. The coronavirus was the pin that popped the almost everything bubble. All of these bubbles are deflating. They're panicked and they're losing control. This, like I said, it's the end of a debt supercycle. They're going to try and blame everything on the coronavirus, but it was actually destined to happen anyway because of the way that our modern banking system works and the leverage that they had built into this system and the complexity of the system makes it more and more and more fragile, and now the system is beginning to break. Banks lowered rates and did swap lines. The quantitative easing will take 500 billion of treasuries and 200 billion of agency-backed mortgage securities, so mortgage-backed securities. And it starts Monday. So the Fed cut rates, but look at this. It's 700 billion worth of asset purchases. They counterfeit currency into existence and they buy stuff. They buy stuff away from you and me. They create all this currency. Now, quantitative easing, I'm going to explain this in an upcoming video because nobody seems to know how quantitative easing actually works. And so I'm going to show you that it's completely different than permanent open market operations or temporary open market operations, which is the repurchase agreements. So while I had made this chart here earlier today, and when I saw it, it was very alarming. You know, I track the dynamic yield curve, and just below that, you can click on the different charts that make it up. And you can follow what the interest rates are for all the different maturities of bills, notes, and bonds, the treasury bonds. And what I saw here was, when they lowered the interest rate to 1%, it was a day after these bonds had crashed to 1%. So it was the free market sort of setting the rate, and then the Fed followed. And so I was predicting in my last video that this would be lowered down to like 0.25% or zero is what I said. And before we could get it done, edited, while it was uploading, they made that announcement. Then I showed this graph of how the Fed is reactionary, not anticipatory. They're not controlling the market. They're reacting to it. They are right now losing control. The rates go up, and the Fed then increased rates back in 2018. And then they started lowering rates in late 2019 because the bonds were falling faster than the Fed funds rate. So I saw that the free market was actually in charge, and the Fed was losing control. So with these asset purchases they're going to do, here are the assets. This is securities held outright, U.S. Treasury securities. So this is all of the different bills, notes, and bonds that the Federal Reserve holds. And you can see this is the crisis of '08, and then QE1, QE2, and QE3. And it took us up to a level. And they were trying to normalize their balance sheet, and they couldn't. And by August of last year, it bottomed at just over $2 trillion worth of treasuries that they had purchased. Now, here's the evil thing about this. They counterfeit currency into existence, and they buy a U.S. Treasury. a U.S. Treasury is an IOU from the Treasury, and they're going to pay back that IOU by taxing all of us in the future. So the principal and interest that is paid on these bonds that the Federal Reserve is buying with currency that they just create, they type it up and they credit an account. That bond has to be paid by you and I and your children in the future. Some of these bonds are 30-year bonds. And so you're talking about your children having to work and pay taxes to pay off these bonds. So they've already increased this from about $500 billion since August of last year. They've been buying those through permanent open market operations. Now through QE, they're going to buy another $500 billion, and they're going to do it at a pace more rapid than ever before. And this is along with the other $1.5 trillion, which actually extrapolates out to about $4 trillion that they're doing. So they're adding $700 billion on top of the $4 trillion of the repurchase agreements that pile up on top of each other when they're doing purchases of 1 month and 3 month repurchase agreements, which they announced earlier. Then they also announced $200 billion worth of mortgage-backed securities. So they've been trying to unwind this, and now they can't. They're going to have to. The Federal Reserve is the largest owner of real estate in the world. They have purchased $1.3 trillion, and now it's going to be over 1.5. This is almost 1.4 here, trillion dollars of mortgage-backed securities. So they hold the mortgages on all of these homes, basically. And now they're going to increase this this will be almost 1.6 trillion, and it's not going to stop there. This is a crisis. This is really the end game. And what's going to happen is there's this slow meltdown that is now being sped up by coronavirus, because it's going to shut down our economy just like it shut down the Chinese economy, and like it is currently beginning to shut down the economies in Europe. And it's going to be worse here because we bungled it. We could have started the measures that they're starting right now 2 months ago. They're just like recognizing it. They should have, I don't want to go there. So this was the chart that I was showing of how the Fed is being reactionary. So over to my website. This was the video that we just did where I was predicting something, and then before we got the video uploaded, it actually happened. I want you to see that the White House had a live coronavirus task force, delivers another update, and then Fed cuts rates to zero. New York governor wants Trump to mobilize the military over the coronavirus. And then, something really important. All of this was predicted in my book. And so I was writing this in 2005, 6, and 7. And then if you watch the Hidden Secrets of Money series, just watch the whole thing again. I was just watching some of 2 and 3. And these things back, 7, 6 years ago, 6 years ago, 6 years ago, 4 years ago, 4 years ago, 3 years ago, 2 years ago. They're predicting all of this. The Bitcoin one, not quite as much, but it's very important. Actually, it's time to just rewatch all of these because you'll see it all laid out and you'll understand more of how to protect yourself through this thing. This is getting pretty darn scary. And I expect just utter chaos breaking out and a breakdown of the global financial system. This time, we came within a couple of days of the interbank lending freezing up, where banks don't trust each other and they won't lend to each other. And if that happens, the next day credit cards will stop working. And if that happens, then the gas stops coming out of the pump. And a couple days later, there's no more groceries in the grocery store. We came within a couple days of that in 1998 with long-term capital management. We came within about 24 hours of it when Lehman Brothers melted down and when Ben Bernanke launched all of this QE and everything. And now we're basically there. So I'm expecting that there will be some sort of bank holiday and bail-ins and bailouts. Get ready for the biggest bailouts in history. When you close down all of the restaurants for a month and you close down the cruise lines and the airlines, and I mean, we're going to be creating trillions upon trillions upon trillions of dollars shortly. This isn't going to take that long. And then there's going to be the helicopter drops that I talk about. Watch episode 7. Then make sure you do this. Click on videos. Go over to sort by most popular. And, here's all of those videos again. But watch this one, Decoding the Elite Plan for the World Economy, because that is what all of my predictions were based on. And it's a 2002 paper by Ben Bernanke. It was a speech by Ben Bernanke, and I saw what was coming. I wrote my book around it. I wrapped my entire life around it, betting that this stuff would actually come true. It's taken a little bit longer than I thought, but it is playing out as written. So thank you very much for listening. Do your best to protect yourselves, as I have. And we all just have to hope for the best. It's scary times. It's not bad to be scared. It's just bad to let your fear control your decisions. Thanks again. We'll see you next time.